When you look at China, the Chinese economy, and actually what role play Standard Chartered can have,
yeah.
are you long or are you short on the Chinese economy?
Oh, extremely long. And we're long, actually, in the medium and the long term. The short term, of course, there's some pressures. But at 6%, 5.86% growth, these are pressures that are manageable. But no, the underlying dynamism of the economy is very, very strong, and I think will continue to get stronger.
When you look at Belt and Road, what's precise, I don't know if it's projects or investments, does Standard Chart play a role in?
So over the past year, we've done almost 100 Belt and Road projects, so it's building up over the past few years. Big focus on sustainable energy projects, I would say, renewables and the like. So we've done some very exciting new age solar farms in the UAE, for example, with this new technology that allows power to be stored overnight through retained heat. That allows the solar power to be continuously delivered. So this is Chinese contractors with some Chinese financing together with local clients of ours in the UAE, creating a sustainable energy future. That's the sort of Belt and Road project that I think is really beginning to build up and become more important, and there's a key role for us to play in that.
If you look at the world economy, so it seems that we're in a better footing maybe than we thought we would be 3-4 months ago, but is it still fragile?
It's a bit fragile because we know that there's lots of things going on in the geopolitical world that could derail what otherwise I think is a reasonably robust economy. So we've obviously had a dip. I think that dip will persist for a little while. But the outlook for as we get into 2020 and beyond is pretty good actually. It feels like we've made some of the adjustments related to the initial phase of the trade war. Obviously, if things get worse on any of the fronts that we all watch quite closely, then we'd be in a different. But certainly we're optimistic that we can avoid a detour back into the bad zone. And I can tell you, Standard Chartered, we're continuing to invest as if the economy will steadily improve over the next year and a half.
So you're talking about U.S.-China trade, I guess, getting worse?
U.S.-China trade, the unstable situation in the Middle East, and then the overall level of just compression of demand on the back of uncertainty, and the suppression of investment. All those things seem to be bottoming out around now.
What happens to Hong Kong, and what kind of impact have you so far seen on your clients?
So we've obviously seen the overall level of economic activity drop. It's been very focused on a few sectors. So tourism, hospitality, retail have been really badly affected. And then, of course, some of our clients in those sectors are feeling that directly. But the broader business environment is still okay. And the impact on our business has been okay. So we reported in our third quarter earnings that our earnings were actually up in Hong Kong relative to the third quarter of last year. Now, obviously, with the downward pressure on economic activity, I think we can expect to see some more impact from here. But so far, manageable.
But are your clients changing behaviors? Or are they opening offshore accounts?
What we've seen is not a flood, but we've seen a number of clients who have set up accounts in other places just in case. So we've seen very little money flow. And if you look at the aggregate foreign exchange reserves in Hong Kong, they've not moved, which suggests that overall the money is staying in Hong Kong. But of course people are making arrangements to contemplate some scenario where they wish they had an account someplace else.
And this is if the protests get worse, or even if they stay like they were in the last 10 weeks?
Yeah, I don't think it's so much the level of protests. I think it's more to do with the very, very remote possibility that the structure of Hong Kong changes in some way.
Fine. Talk to me about U.S. China. If we stay in this trade war without getting a phase one deal, but without it getting worse, what does that mean for the world economy?
I think the world has adjusted to. I think China has adjusted, and I think supply chains are steadily adjusting to this reality that some goods have become more expensive. And we're also seeing, I think, as recently as last night, some of the companies that are really feeling the pain. I mean, the one that was identified as a result of a visit from President Trump was Apple. It's very difficult for Apple to run their business. That's not a good thing for U.S. consumers. So I'd say there's a flexibility and a reality on both sides that should allow us to get to an agreement.
But if you look at Apple, what does that mean? So we're going into the holiday season. Is it more likely that we get a phase one deal because of the impact it could have on U.S. consumers right before Christmas?
Yeah, I don't know that the Christmas effect is that big, just given the timing of things. But I think right now it's as much sentiment as anything. If the business community, and to an extent the consumer community, believes that there's a piece that's at least a détente that's going to come out, then investments will begin again. People will begin to stop taking the actions that one takes if they think tariff increases are pending. So I think it's a confidence thing as much as a behavior thing.
But has the U.S.-China trade war actually changed the world economy forever because the supply chains have changed? And will the supply chains go back to what they used to be if there's a resolution?
So the supply chains are evolving anyway. As we know, China is not the low-cost producer for a number of goods any longer. It's a much more prevalent, high-value-added producer. So that change was happening in any case. But no, the world has changed forever. I think the confidence of supply from a single source for anybody in the world has reduced. So people will be spreading their bets. They'll be hedging themselves. They'll be arranging alternative supply chains, and they'll be, I'm afraid, they'll be building more and more at home. I say I'm afraid because we all know that this old theory of comparative advantage says that we should be doing things where they can be done best, and there will be less of that.
So what does it mean for your clients? And what does it mean actually for the countries where you want to focus on?
So as always, there's risks and opportunities and costs and benefits. So some of our clients are having to scramble to arrange these alternative supplies or offset the cost of higher cost of goods. And others are benefiting because they're finding themselves as relevant in a supply chain that they weren't relevant in earlier. So countries like Vietnam, Malaysia, Thailand, even India are benefiting substantially from Western and Chinese manufacturing that's being moved on the margin into those regions. And we know obviously clients in parts of China and in the U.S. are being affected by either an inability to sell their goods or a higher cost of goods.
Does it change the structure of Standard Chartered in some of the stakes that you want to sell or some of the assets that you want to sell and be present in more in other countries?
Well, I think we're always looking at new markets, but the short answer is no. Our strategy has been very clear for a long time that absolutely central to what we do is to promote the opening up of China. So the movement of money, the movement of investment, helping Chinese investors go out, helping international investors go in. Of course, given our footprint in Asia, the Middle East, and Africa, that is the China sphere as it is. So as much as U.S. China trade is being disrupted by the tariffs, trade between China and the rest of Asia, the Middle East, and Africa, is going to continue to grow, and that's the heart of our business.
You're selling a stake in Permata?
Permata, yeah.
Permata. When will that happen?
It'll happen when we reach the right deal with the right people. But we have a 45% stake in this bank. Astra, which is part of the Jardines Group, has the other 45%. We're going through a process now, and I hope that we can announce something sooner rather than later.
I feel like every week there's a rumor about some bank, consolidating with another, merging with another. Are you going to see more consolidation in the sector? What does it take for actually banks to merge?
I think the biggest impediment to consolidation in the sector is regulation, and in particular capital rules. So the post-financial crisis capital rules discourage banks from getting bigger because of various surcharges to the incremental capital requirements as bank gets bigger. So I think the biggest impediment, in particular in Europe, which is pretty evidently overbanked, and with a profitability challenge for continental European banks, the challenge has been getting the regulators to find a way, banks and the regulators together, to find a way to work through that. I think in the rest of the world, you probably need to have a little bit more exposure to some of the challenges. So I know the local banks in China and in most of Asia are doing quite well. So they don't feel a compelling need to merge.
But in Europe, do you need a banking union to actually facilitate
that?
Mergers?
Would be very helpful. It would be very helpful.
Are we going to
the
get
extent
it?
that there's a common market, I think eventually we'll get it because the common sense is so overwhelming that this would be a good thing to promote European economic growth. I think Europe had to go through a process of getting the banks cleaned up before the strong countries were prepared to take on the liabilities of the weak countries when you get right down to it. But that has substantially happened. I mean, the banking systems in Greece and Italy, Portugal, Spain, substantially improved. So maybe we're getting closer.
But will you play a role in it? Will Standard Chartered play a role in consolidation?
I mean, we have a meaningful corporate business in Europe. For the most part, our angle is serving European corporations who have business back in Asia, the Middle East, and Africa. So we're not quite as pure a European play as some of the other banks. But in the context of Brexit, we set up quite a substantial bank in Germany, which is perhaps there's ways for us to participate in that. But I don't think I don't think Europe is where Standard Chartered would start in the consolidation game.
Speaking of Brexit, what would you ask of the next government in terms of, I don't know whether it's equivalency when Brexit happens, but what do you need from them in terms of regulation?
Well, first and foremost, get the free trade deal agreed quickly, because of course it's great that we can get the deal that Prime Minister Johnson has negotiated with the EU through it, assuming he wins the election, big assumption, but if he does, and he gets that deal through to completion in Parliament, Then there's another year or so of negotiating a free trade agreement. That's another period of uncertainty, and that uncertainty is killing the UK. It's a really bad thing. So get that done. As you're agreeing the free trade agreement, don't forget the services industry. That 84% of the British economy that isn't covered by the goods agreements that have been reached. And the financial services industry is the biggest, or at least amongst the biggest in that. And this, as you mentioned, the equivalency is critical.
But have you had any assurances from Boris Johnson? I don't know whether you've met with Jeremy Corbyn that actually this is a priority for renegotiating?
Unfortunately, I've not heard the refrain that there's going to be a great focus on that backbone of the British economy, which is services. I see much more focus on the trade of goods, and I think that's a problem.
When you look at your clients in Asia, but across the world, are they still spending? One of the big concerns is that chief executives are stopping spending, and so in a couple of years, the lack of investment will lead to the next recession. Yeah,
I think we clearly have been underinvesting during this period of uncertainty. Now, I can take the micro example of Standard Chartered and say that we've only increased our investments, and that's because we have great confidence in our markets, this part of the world, and because we have a lot to do. But you look broadly across the piece, people are holding back until the various external geopolitical type considerations that we've got, including Brexit, are resolved.
Do you worry about liquidity in the market? Do you worry at all about market function as we get towards the end of the year?
I think the repo kerfuffle in the U.S. was a reminder to all of us that despite the fact that markets appear to be extremely well functioning and liquid, and stock markets are at all-time highs, et cetera, that some of the fabric of the market is still fragile in ways that are surprising sometimes. And I think we haven't really had a test of the market post the financial crisis around the substantially more onerous rules on banks in terms of making markets in things like corporate bonds. We haven't had the credit crunch that would really test the functioning of the market. So I'm concerned that there's a little bit more fragility in there that we're aware, but it's not obvious exactly where it is.
Bill, I need to ask you, because a lot of the talk is on Prince Andrew, the interview that he did last week, and of course a lot of banks have severed their ties with their charity, including Standard Chartered. Yeah. What does it mean for a future relationship of banks and charities? Do they need to embrace the causes better?
So the Pitch at the Palace, which is the charity that we've been involved with for several years, it's a phenomenal institution, and it's helped literally thousands of entrepreneurs across Britain. But we've also done Pitch at the Palace events in Beijing and in Shanghai, in Africa, and in the Middle East. So it's really a great way to promote enterprise and commerce for people looking to do startups. So. I think what we've always focused on is the effect of the charities that we're supporting, and we will continue to focus on that.